There we go. Hello, everybody. Welcome to Market Moves. I'm Jason, the Wizard of Ops. And I've got two companions with me today, as opposed to last week when I had zero. So, as usual, we have Jay, aka Dark Matter, and he'll be able to give you his trade plan this week. And we are especially excited to have Hans on, Hans Albrecht from Leduc Trading. And we'll talk to him. He's the option specialist for Samantha. So, gentlemen, how are you doing? And we'll talk to him.
I'm doing well, Jason. Thank you. Appreciate it. It's been a little bit of a delay of us being here on the show, so I'm glad to be back
Hans,
here
I
with
think we're
you.
getting feedback from you.
Yeah, getting some feedback here. Let me figure that out.
Ladies and gentlemen, we said he was an option specialist, not an AV specialist.
Yeah.
Getting some feedback here. Let me figure that out. Ladies and gentlemen, we said
got to figure that out.
Specialist, not an AV specialist. Yeah. How do we get that off from you, Hans?
Okay, let me see if I can find that.
All right. Well, here, let's mute. I'm going to mute you while we. There we go. So I'll talk to Jay. You can figure that out, and Jay can do his. Trade plan, and then we'll move on to you, Hans, because we're very excited to learn about you and everything that you do with Leduc Trading and how you trade. So, but first, Jay, let's see what you got.
Yeah, let's go ahead and jump right into the trade plan. This week's going to be quite interesting, so lots to get through. So let me just kind of give my high-level summary. We do have quite a few, dealer flows in terms of some Van and Gamma kind of clustered in that 6450 to 6500 region there. So maybe magnet, aka, kind of think of it as that way. With 6465 is kind of my key pivot. Like if we don't get above that, you're going to kind of be in this choppy waters here, and you'll see what I mean with, between 6440 and 6465. That's exactly what we've gotten here in the overnight action. And ultimately, if you see, that 6450, 6440 level broken, I do expect us to go test the waters between 6420 and 6400 Wiz. We do have quite a bit of dealer support there as well. So maybe there's a little bit of choppy waters until we get into later this week, which the big catalyst we'll get into in just a minute here. While we do have FOMC minutes, and those are always insightful, the big dog here this week is going to be Powell, Jackson Hole on Friday. So that's what we've got to look forward to. So you might see the market in a little bit of a choppy stance until later this week, and Jackson Hole in itself. So again, just to recap those event catalysts, we do have some bond auctions just to call out in the afternoon, I think Tuesday and Wednesday as well. So just for intraday traders, expect a little bit more volatility around those bond auctions. But the big event catalyst, you've got the housing starts and building permits tomorrow, FOMC minutes on Wednesday, as we mentioned. Thursday, we've got existing home sales. And then last but not least, we do have our lovely Fed Chair Powell, who will be coming and speaking to us from Jackson Hole, where a bunch of his other friends, those who are unaware of what Jackson Hole is, it's just bankers who get there together with a bunch of other big CEOs, and they probably navigate and decide what our economics do for the next few years. So Wiz, that's kind of our catalyst. I'm going to quickly pause just to let you chime in.
Yeah, I mean, first and foremost, in the Volin circles, we don't like to call it Jackson Hole. We like to call it Jack Hole. So if you could, just, clean up your language. So
I missed the memo, clearly.
There are worse holes to call it. That's for sure.
So Jack Hole it's in what is it? Colorado? It's Colorado or
Wyoming,
Denver, right? Colorado. Very picturesque, very nice. That's why I guess they have it there every year. And sometimes, unlike most other FOMC speeches, Jack Hole, provide some pivots at times. So, I mean, this one can be significant. There is a little bit of event vol for Friday, so keep an eye out for it. That is the large catalyst for the week. So, Hans, do you have anything to talk about or for catalysts?
Yeah, I see a bit more chop. We just have amazing resilience in this market. So I see a bit of chop probably until close to Jackson Hole, where I think the whole idea has been, people have just been kind of crushing vol. They're kind of trying to pinpoint periods of where nothing's going to happen, and then price in a little bit extra for when there's a potentially market moving event. But the market's gotten a little desensitized to things. We're not really, clearly we're bouncing back from just about everything. And that's, on the one hand, that's concerning, right? When I start to see that kind of realized versus that short-term realized vol versus the VIX, when that gap gets pretty big, that's when the textbooks say, wow, look at all this volatility risk premium. It's easy money. It's when things maybe just get a little bit too quiet and we're susceptible to maybe a little pullback. But I think there are some big underlying currents that are really underpinning this market, like AI. I think there's just kind of a fever that's sort of playing into maybe, keeping things firmly bid. Because structurally, we've had the vol targeting funds, the CTA, like we've sort of seen a replenishment from that end of things. So it's, you kind of have to look elsewhere. I think institutional money maybe hasn't fully gotten on board, which is sort of the smart money is lagging. So that's part of it as well, I think.
Yep.
Yeah.
Agreed.
Good call.
All right, Jay, what do you got for?
All right, so well, outside of those event catalysts, we're still in earnings season, and this week, obviously Nvidia's next week, so everyone calm down. That fun is next week, but this week there are just a few out there that are important that I'll call out. You've got Home Depot before the bell tomorrow, Toll Brothers after the bell, and then we've got Target as well, and then Walmart before the open on Thursday. So just consumers, how's the the health of the economy. So a few of those key tickers I'll just be on the lookout for to see how they do.
Yeah, those are pretty big. Those are pretty big, I'd say, right?
Especially for tariff situations too.
Yeah, it's really it's all about the way that I've been kind of saying this for months. I said, inflation really isn't the focus here. I know everybody sort of focuses on that. They think, higher for longer. I think that's going to be taken care of. And really, it's not as high as people think. The focus is really jobs, right? It's the economy. And so those are really the data points that we're looking for. And so far, it hasn't been that great. And the broader economy names, it's really kind of this new world of AI, CapEx growth, enthusiasm for perhaps productivity growth versus the real world, which is, UPS and FedEx and some of these discretionary names that are kind of going, well, things aren't that great. So it's really sort of a strange market where we're hitting all-time highs, yet we do see weakness, and then on the employment side. So these names are quite important. I don't know if Powell looks at, Lululemon earnings or anything like that. Probably not, but it's pretty important, right? I'm sure he wears Lululemon pants. Hopefully not the see-through kind, but
well, maybe. Yeah, I'm sure Powell stays away from Lululemon because he doesn't want anybody to see his jackhole. So.
Yes. There we go.
Walmart and Target. Walmart and Target to me are pretty important. I mean, they've raised their prices already, and I think what's really telling is seeing the PPI divergence from CPI last week, and that kind of feeds into that. Employment will probably sink before inflation starts shooting up, so it plays into that narrative, but.
Employment employment at some point will, we could get some stagflationary sort of scenarios, but employment will start to dictate inflation at some point, right? If we keep getting, you can't just have 127 new billionaires carrying the economy. So it's, there's only so much benefit from that at the moment. I think the jury's out on there will be massive productivity gains from this. Mm-hmm. And that may play out in a broader way, right? if a small and medium company, which of course we know are in charge, we hear about the big caps, but there are a lot of companies out there, smaller ones that have a big say in employment. And so if you can now produce the same, with 10 people that used to produce with 20 people because of AI or some productivity gain, then that's a big deal for the IWM. So I think that's a positive there. And if you get rates coming down too, that could be big. So,
yeah.
I think that, with AI, if you start to see jobs go down with AI, right? Like a lot of what they're trying to build with AI is only to supplement the human power that doesn't exist here from a labor perspective, right? So you start to see just more money funneling into AI, Hans. I'm with you, right? Like, and you see the job market go down, like that's just a recipe for badness, and it's not going to end up well for any of us, for sure.
No, there's a kind of like a sort of strange paradox, or I don't know if that's the right word, but if you think about it, all this money that's going into AI, so this CapEx from big cap, and then of course as you go down the chain to medium and small companies, et cetera, you're spending a lot of money, and maybe there's some sort of temporary, okay, you're going to build some data centers, you're going to, there's a build out, right? There's an infrastructure build out. It's the printing press. So we're going to have to build printing presses all over the place. So there's going to be that initial thing, but the very thing you're investing in is very good at one thing, and that's replacing people. So you're investing in something that is going to ultimately, have an impact on employment. So it's almost this kind of strange kind of investment, whereas traditionally maybe investment is, hey, let's build something and we're going to create jobs and we're going to have some durable benefit from this over time. This is exactly spending money on something that's going to replace people. So it's a bizarre kind of situation where there's an intersection somewhere where there's an impact to employment from this, and you can't get too excited about the spend because it's exactly pointing towards things that maybe we don't want in the long run.
Agreed.
Yeah,
It's gonna be a strange world.
So what's your plan for the week, Jay?
Besides being taken over by AI and not having a life anymore, no. My plan for the week is.
Well, we can be as good looking as we want. Next time we're on, we'll be, we'll have an avatar, and I'm going to look like Brad Pitt, and this is, there's an upside to all this too.
And I'll put on an avatar, and I won't even be here.
Yeah,
I'll be asleep still.
All right. So what am I doing? So just on the VIX front, I'm kind of watching 15 to 16 handle on the VIX this week. I think if we're in that, we're going to see, as Hans said, a little bit of those choppy waters. I think in order to break, a leg here, Jason, from like a leg standpoint, some of those key levels we were initially talking about, you're gonna have to see obviously the VIX compressed even further than we've seen it for us to break through 6,500 and even above last week's high near 6,480. So I think that's going to be very important, is that compression of the VIX below 15 in order to break through 6,500. And then if you want any selling, you got to just see the VIX above a 16, start there, make some damage, and off you go. In terms of those positions, where the dealer's at, so from a gamma standpoint, the largest one you can clearly see in falling right now is that 6,500 wall on the gamma standpoint. We also have some gamma at 6,450, and then we start to enter into negative gamma territory as we get below 6,400. So, there's just a lot of, if we go below this 6,450 zone here, I do expect price to kind of get magnet and pull back up. So you'll start to see that. From a Vanna standpoint, again, we're in like a ramp of Vanna right now, positive Vanna that is. But if we start to bleed, below 6,440, we'll start to enter some of that negative Vanna territory. And then your deltas there, similar levels. So my trade plan for this week, let me now fast forward here as you kind of heard some of those key levels here. So Hans and Jason, what I'm kind of looking for is obviously the break above 64.65 just if you want to be on the clear side, that's the level you want to break. And in futures action, we actually resisted that level. We sold off, I think about close to, what is it, about almost 20 to 20-ish points from the high of futures action, which is right around 64, 65. You break, you hold above that. I think you start to chase 6,500. I think you then get maybe a reaction out of J-hole, and then you can start to push some of those upper levels of, 65.20, 65.40. Will it last long? I think that's a whole other side of the story here. Let's see what some of the response out of J-hole are. Otherwise, if you can't get back and hold above 64, 65, you're going to find yourself chopped with support coming in at 64.20. We do have some minor support here at 64.40, which we kind of bounced off of in futures action. But to me, I think you're in choppy waters right now until one of those sides starts to break. I'll pause.
Yeah.
Thoughts?
First of all, it's Jack hole, not J hole.
Yeah, sorry.
Jay, you're really busting this up. I think 6,500 is a strong resistance on pretty much every level. The all expirations this week, next week. Next week, in fact, is negative Vanna on the weekly standpoint. There's so many sold premium nowadays. Even today, I think it's 6,400 and 6,470. We're seeing a bound of sold premium, and that could cause a little bit of those sold premium levels, especially on the downside. That's not that's not like very supportive, right? Like sold premium causes whipsaw. So I would be careful. I think like if we do get above 6,470, I'm looking at your targets up there and I see 6,500, and that could be pretty much a magnet. Anything above 6,500, I'm selling. I think that 6,500 is the place that that's the sun to the orbit. So, but because there's not a lot of support below, if the market sells off, if somebody finds a reason to sell it off, some jackhole reason, that can fly right down. So, I think that's what Volin's telling me anyway.
Remember Jackhole a few years ago? I don't remember what year it was. Maybe it was 2022, where the market did not like it, and so.
Well, that's when Powell pivoted, and now the market's expecting Powell to cut. He might not. I mean, PCE read through from PPI is like 2.9%. He might stand up at Jackhole and say, I know everybody wants me to cut. I know Trump wants me to cut. I ain't cutting. The only reason why he would cut right now is political pressure. And if there's one thing that Jerome Powell has resisted over these past several months since Trump took office, is political pressure. So, and this is what I saw next week, right? Is this the next week chart?
Yes. Yeah. Well, this includes this week and next week. But to your point, you can start to see some of that negative Vanna take over here. And I think anytime for our viewers out there, when you start to see especially a weekly profile get really nasty, like a roller coaster here, to Han's point, there's a lot of chop, especially front loading. Until you start to see this curve out a little bit more, that move is not going to come. So for any of our traders here, hey, I want to enter at a key level and just sit and wait and take profit once I hit a key level on the weekly. It's not that kind of week. You're just going to get mean reverted, bounce back and forth, in my opinion, until you start to see this clear up a little bit, which I think, in my opinion, is going to be closer to the end of this week than not.
Yeah, for a reference for you, Hans, if negative Vanna below price is sold options below price. So, when you see that huge hill, that huge downhill there, those are premium sellers for next week already, trying to capture, market hasn't really substantially gone down. If you're looking at realized vol in the history over the past month, you're looking at it and thinking nothing will send this market down. So I guess there's a lot of people selling premium, and that alone could send the market down. So it's kind of
that's what we had a couple of weeks ago, Jason. We had maybe it was 2 or 3 weeks ago. We had somebody put out this chart on puts, 1 DTE put selling, and the sharp on that, and it was parabolic. And I was on Sam's show, and I said, "This is not natural, right? This is not." I mean, it literally was parabolic, like a meme stock. And so it was like a 10 or 11 sharp on doing that. And I said, it's been guaranteed money to sell puts. It's been basically, that's been a rock solid play for a while. So and I said, that's not good. So a couple of days later, we had something happened and we dropped a couple hundred points. And it's not that we were calling that sell off. It's that you do get these situations where you're right. It feels like they can never go down again. And it can feel like an air pocket. Now, whether you think there's an underlying bid in there or not, which we've seen over the last couple of months, we've seen it's almost always in there. Whenever something came out, we started to steadily see that bid coming back in and pushing things back up. So maybe that's going to happen no matter what. But we do have the potential for these air pockets. There's no question.
Yeah.
Yeah.
Cool. So Jay,
Right.
Is that what you got?
That's all I got.
You got to talk to Hans, man. We didn't bring him on here for his looks, for sure. So
That's right. That's right.
I'll bring my avatar next time. Okay.
So yeah. I mean, let's. I'll go like this.
Well, I was going to say the way I've been playing it, Jason, is I've been. I think we needed to see Palantir. We need to see, Palantir trading at 1 million times earnings. I think maybe 3 million times earnings at this point, which is,
that makes
a little rich.
Yeah.
It's a little rich, right? They're redefining software for the new internet age, but that could be considered a little rich. So we got out of a lot of positions there. So what we've been doing is getting out of some of these positions that have worked out well in playing the AI theme, and then sort of replacing some of that with some upside flies. Some broken wing flies, and kind of playing that sort of, push further, but not as strong. So for example, on Palantir, we saw that there was quite a bit of gamma between 180 and 185, good, nice thick gamma around that 185 level. And so, I posed to my mentoring students, I run mentoring programs, and I said, listen, we're probably going to have a little bit of trouble, even though this theme, clearly Palantir just went up $50 in a straight line, but it may have a little trouble getting through that 185 level. And sure enough, it did. That's not the whole story. It's always one piece of the story. And we've seen it struggle there. And Meta was another one, kind of continuing to play a little bit of that upside, took off a fly last week on Friday for a nice win. And now it's kind of filling in again. So I think for now, this week, if we are right, the three of us are right, and it's a little bit of chop, I think on things like Meta, a few names, I'm going to probably restructure those flies, like a Meta 780, 800, 810 kind of thing, 820 kind of thing, just to kind of play the bounces with that underlying resilience that's there. It's one of my favorite names. So just kind of playing those little plays. So I think anybody out there who's looking for these melt up type moves, those have happened. That's happened. We just rallied 800 points. Those have happened. So I think at this point, it's playing for those little kind of singles. You may have hit some home runs and triples. Now it's maybe just those single type plays, defined risk, just in case we get that pocket, you're going to limit your risk on a fly. So I'm kind of looking at a few things like that.
So Hans, I had my list of questions, but you basically answered most of them already. But I do have to ask, how do you know that gamma is thick between 180 and 185?
Well, you need the right tools, of course, which I don't know if you know of anyone with the right tools, but this is useful stuff, right? I mean, it's kind of funny. I was telling somebody that yesterday. They were like, "Oh, wow, what kind of systems did you have when you were a market maker?" So I started in the mid 90s all the way to like the mid 2010s. And I was like, I had nothing. I had a DOS program where I would like type in my positions at the end of the day, because I was the options market maker, pro market maker. And I needed to know what my bend was like what did my position look like on movement? And I'd literally come into the pit with like a sheet. And if I did any new trades during the day, well, I'd have to kind of eyeball that and figure it out. And I said, we had like almost nothing compared to what people have today. You have the ability to be an absolute ninja when it comes to volatility with something like Volland. It is phenomenal what retail has available and institutions have available to them. So the playing field has been leveled in many ways, and this is a fantastic thing to have in your toolbox.
Yeah, it's there's a lot of one thing that we pride ourselves on is we are data analysts. I'm an economist, and we do a lot of work in this section, and we know when data is poor, and that's the niche that we see. I don't want to say that like prior platforms were wrong or something. They're just more data has become available, and I think we've evolved to a point where now we're getting data from exchanges that are able to populate this. So, as data analysts, we end up doing studies and we know where to identify the things. And, when you start saying thick gamma, things like that, what does that mean? Typically that means very strong positive gamma that, dealers would end up working against the momentum. Now, why does it keep going up? Because there's also volatility differences. And when volatility starts coming down and you have positive VANA, then that causes, slight progression up. Market maker, I mean, you could tell me, Hans, when you were a market maker, how strictly did you hedge your Vega, hedge your volatility?
Well, it's funny because I'll be the first to admit back then, I mean, everyone learned in different ways, but and I read the option Bibles like everybody else, but I didn't think of it in these terms. I didn't think of, well, I'm long gamma up here, and if I'm, I would know these things more or less intuitively just having done it for so long.
Right.
And so what tools can do for you is they can give you, there's art and science to everything we do. There's science. And you can watch YouTube videos and get a lot of that, but there's art. The art of it can be learned by just making mistakes over years and years, or the right tools can kind of compress the time to learn the art. And this helps you with the art, right? So I would know intuitively, I'd be like, okay, well, I'm long a whole bunch of these calls up here. And I would know, just having done it, that as the stock moves up, I'm going to have, charm and VANA effects, because I just know I may be long a whole bunch of deltas. In fact, I need to be long a whole bunch of deltas because they're not real deltas. They're weak deltas. They're soft deltas because they're going to get crushed as the stock goes up. And if I start aggressively hedging that, I'm going to get hurt on the way up. So I would know these things more or less intuitively, but with something like this, you can see it. You see what's going to happen there in real time, more or less. And that's an amazing thing to have. So you don't have to be the intuitive type anymore.
So that's, and even though we get a lot of former market makers on here whose jobs have been replaced by computers. There's your AI predecessor, right? And they say the similar kind of things, and computers don't even really have that art kind of thing. They religiously hedge their deltas, but stuff like Vega and, the premium Greeks, so to speak, the ones based on the premium of the option, they're not quite, like you said, they're intuitively, when it gets here, I'll start paying attention. But the conversion of those into deltas is very important. The conversion of a Greek that you're not paying attention to one that you are, that's how we kind of notice these trends. That would be the causation of our correlation. So, I mean, and, a lot of people come on and say the same thing you did, like I used a piece of paper, or I used, an abacus or whatever, to, if it's Lex or somebody like that, but, I mean, the tools that we've made and kind of making it available. I mean, like in the institutions, they kind of pride themselves on their own models of stuff. And, kind of have an inherent distrust of retail. But, I think that also works into your advantage as a retail investor. So, I mean, we pride ourselves in getting the data right and doing it, the right way. So that's
and that goes for individual names, but also broad market. So you want to kind of have an idea of that broad. So the reason one way to do well is to have different time frames, right? You kind of have to zoom out. You can get caught in, you can sometimes get stuck in the noise, and you need to zoom out and look at that broader market profile, because that's going to tell you where, if we get, for example, if we get a melt up, the VIX isn't going to go to 13, right? The VIX is going to start, a melt up is going to be, kind of a spot up, vol up, and then maybe skew, call skew, So for me, you have to be aware of kind of where the pockets are, the broader pockets, even as you trade individual names, because they will all get kind of pulled. Things will correlate, right? So you kind of have to have that zoom out, zoom in kind of approach to trading, I think, unless you're just, sitting in the pit and you're scalping like, pennies.
Right. So you were mentioning Meta is one of your favorite names. So we brought up the gamma profile of Meta. What's that big green bar there, Jay?
That is a $800 strike.
So that looks like that's the strike everybody's selling calls on, right? I guess, people may be buying calls or buying puts below it. It's probably more like buying puts. That's where all that little negative pocket is there. But yeah, I mean, ultimately, it almost seems like if you are bullish on Meta, 800 is a strong target. And what are we at now? 720 something? So
I think we're 780. Around 780.
So 20 points. So yeah, I mean, if you're
getting close.
Yeah, if you have Meta there, I mean, I guess what happened is, and I'm guessing, I don't pay as close attention to Meta as you do, Hans, but I guess we were around the earnings time frame. We were closer to 800. Maybe we dropped a little bit, but that looks like a lot of put support right there. Meta, I would put that in the bucket of a bounce back candidate back up to 800.
Yeah, strong numbers, strong story. So when I trade, I like to have a story, right? So I won't just trade something for the sake of it or for the sake of a profile. I want to have an idea that, the numbers were great. This is one of those mags that I think, does well. They're monetizing AI well. So it kind of often starts with a bit of a story for me. And then I can wrap my head around valuation and whatever, but it's all about flows. And so this is a name where, for example, I put on a broken wing and it went against me $30, but very, very swiftly it came back. So the idea is that, if you can kind of identify the names with the sort of underlying strength, you can play that in a low risk way, and it'll probably start to tick back up towards your level. No guarantees, of course. But again, this is where maybe that 800 level is associated with, some selling. We get some market maker selling, and so it can slow down there. So I think it's a very logical area. I think you can probably get a little long in the 760 to 770, and then maybe scalp out as you get towards 790.95, just like we did on Friday. We got to 795, and now it's down $20 again.
Yeah.
It's a little bit range bound, right? We're a bit range bound. I think that's the reality of it. I think AI's kind of had that crazy run. It'll melt up more later, but it's had the crazy run. It's a bit of a weird week, right? Because we got the CPI, which was, okay, let's start looking at rate sensitive areas and maybe some real estate names and things like Zillow and Rocket, which are doing well. And then we got the PPI, which was, wait, hold on a sec. We're not getting, we're not getting the 50 basis point cut. So we're a little bit in no man's land right now. And I don't think we get clarity necessarily. Maybe the minutes.
Jack hole.
Yeah.
That's where we're going to get Jack hold.
We're going to get Jack hole, maybe. Yeah.
So yeah, I mean, range bound, and that kind of syncs up very well with this picture, the negative kind of gamma area, positive, puts. It's usually you see that more in Vanna, like that support there, but then 800 seems like a cap. But yeah, so I mean, in Volin, there is a Volin Academy. Sometimes it's more for intermediate. You're expected to kind of have a knowledge of options prior. If you don't have if you don't know, you're tuning in, you're hearing us say Delta and Vanna, and you have no idea what we're talking about. Hans, where can I find information on super basic, kind of basic option courses and yeah.
Well, at Leduc, we have some really great total boot camp beginner, get you up to speed on income strategies, right? That's kind of a big thing. People like the income strategies, of course. That's a big focus for a lot of folks who want to just kind of generate a little bit of that extra, paycheck every month. So that's a great way to get involved. Check it out at Leduc Trading. We've got some terrific offerings there. I do mentoring there as well. And of course, I'm in those rooms posting trades and ideas and guidance and things like that. And we've been, doing very well. So, there are a lot of ways. And then of course, your academy is going to be a great way to kind of dip your toe in to learn about these sort of dealer dynamic kinds of things going on, which in our world is really maybe more important than it ever was, right? Because you've got sort of a whole world that's grown very, very largely, and really we see that the option volumes are kind of off the charts over the last 5 years. So this might have been, maybe when I started, this wasn't a big deal. Nothing I did had any consequence on the market in general. It wasn't really moving equity markets. But now it's the question of the tail and the dog and who's wagging who. And I think we know that it's very, very influenced by what's going on in options markets. And then, of course, synthetic gamma and things like that. So you can kind of keep going and going, those leverage ETFs. So it's all part of this world that is now being pushed around by things that didn't have that much of an effect. And that's where tools like Volland are going to come in handy, because maybe we didn't need Volland 20 years ago. You need it now because it's a very, very big part of market movement.
Yeah, since COVID, definitely.
Yeah, for sure.
All right. Well, Hans, it was great having you on. We're running over time. I could probably sit here and talk to you guys all day.
Same.
Yeah.
Next time. We'll do it next time.
It is. We are 10 minutes to the opening bell. And we got some money to make. So everybody, thank you, Hans, for coming on. And for Jay, may Volland help you in your future trading ventures.